Okay, so let's imagine, right? You're a business owner in Bangladesh.
Okay.
You need to import some goods from the U.S., let's
Yeah.
say in a couple months.
Right.
You're going to have to buy U.S. dollars for that.
For sure.
But the exchange rate, as we all know, it's constantly in flux.
Always moving.
So how can you actually, effectively plan for that?
Yeah, it's a tough one.
And that's where this new formula comes in. From the Bangladesh Bank.
Right.
It's a uniform way to figure out these forward exchange rates.
Uniform is the key word there.
Exactly.
Yeah.
And it's something that will impact really anyone who's dealing with foreign currency transactions.
Absolutely, even individuals.
So today, that's what we're diving into.
Let's do it.
How this actually works and what it could mean for, well, anyone listening.
It's like getting a sneak peek at the future of currency, in a way.
Oh, that's a good way to put it.
Yeah.
Yeah, because a forward exchange rate, that's what we're talking about, is basically you're pre-ordering your currency.
Right, at today's price.
Exactly. So you can protect yourself from those future, fluctuations.
Exactly. Hedge against that risk.
Okay, so let's get into the nitty-gritty, the formula itself.
Okay, let's break it down.
Where do we even begin?
So first we have what's called the spot selling rate.
Spot selling rate. Okay.
You can think of that as our foundation.
Forget basis.
It's the current exchange rate.
So right now, how many taka to the dollar?
Exactly. That's our starting point.
Okay, so we've got our baseline.
Uh-huh.
What's next?
Next, we have the tenor in days.
Tenor in days. All right.
That basically means how far out into the future is this transaction actually happening.
Okay, so
30 days, 90 days, could be even longer.
right. So that time frame really matters.
Absolutely. It's a key factor.
The longer you wait, the more potential for things to, shift.
Exactly. More uncertainty creeps in.
And this is where it gets interesting, right? Interest rates.
Yeah, the fun part.
So we've got to look at Bangladeshi treasury bills.
Short-term government securities.
Right, and their interest rate.
And we also need the rate on comparable U.S. Treasury bills.
Okay, so two sets of interest rates.
And what's crucial is the difference between those rates.
The differential, yeah, I've heard that term.
Yeah, it tells us which currency might gain value.
Or lose value.
Exactly, relative to the other.
So let me ask you, if those Bangladeshi interest rates, let's say they're a lot higher than the U.S. ones.
Okay.
Does that mean we should expect, the taka to weaken against the dollar?
You got it. Higher rates in Bangladesh, they can attract foreign investment, initially driving demand for the taka. But long term, it could lead to inflation.
Ah, I see.
Which could actually weaken the taka.
So it's not as simple as, higher interest rates mean a stronger currency.
Not necessarily. Got to look at the bigger picture.
Okay, so the forward premium, where does that fit in?
So the forward premium, it considers both that interest rate differential we talked about and the length of our contract, the tenor in days. It's essentially the added cost or sometimes even a discount,
The spot selling rate.
Exactly, to reach that final forward rate.
So the forward premium is kind of like the price of certainty.
Yeah, that's a good way to think about it.
You're paying a premium to, lock in a specific exchange rate.
And avoid that market risk.
Right. Makes sense. Yeah. Okay, let's see how this works in a real example.
Love it. Let's get practical.
So let's say a business wants to buy U.S. dollars in, 90 days.
All right, 90 days out.
Spot selling rate. Let's just say it's 110 taka per U.S. dollar.
Okay.
And let's say Tegel rates 8% in Bangladesh.
And 5% in the U.S.
Okay, so what happens?
All right, so we crunch those numbers through the formula.
Okay.
And in this case, we end up with a forward premium of 0.825.
0.825, okay.
We add that to our spot rate of 110.
Right.
And voila, we get a forward rate of 110.825 taka to the dollar.
So that's the rate, locked in no matter what the market does over the next 90 days.
Exactly. That's the beauty of it.
Our business knows exactly how much those dollars are going to cost.
Peace of mind, right?
And this uniform formula from the Bangladesh Bank, this means every bank in Bangladesh is using this same calculation, right?
That's right. Consistency across the board.
So it's like transparency, level playing field for everyone.
Exactly, no matter which bank you go to.
It's like a standardized language for, currency exchange.
I like that analogy. A common ground for everyone.
But beyond just getting that fixed rate, how could this impact businesses?
Okay, so think back to our business owner.
Okay.
They see that Bangladeshi interest rates are going up above U.S. rates.
Like we were talking about.
Yeah, so this formula, it signals that the taka might weaken, right?
Okay.
So strategic question, do they accelerate their imports?
To take advantage of the current rate.
Exactly, potentially a more favorable rate.
So it becomes this strategic planning tool.
Absolutely.
You're not just reacting to the market, you're kind of anticipating it.
Exactly. Using the information to your advantage.
And that could apply to so many different situations, right? Overseas investments, remittances, even just, planning a trip.
Oh, yeah. All sorts of scenarios.
Knowing this formula, it really empowers people to make those informed decisions.
Gives you that edge.
Yeah, like a roadmap for currency exchange.
I like that. A roadmap through the complexities.
But it also makes me wonder, with everyone using this same formula,
Yeah.
what's going to happen to Bangladesh's economy as a whole?
Interesting.
Could this, change its international trade relationships?
That's a big question.
And if so, how?
Well, it's still early days, right?
Yeah.
The formula is just one piece of a very complex puzzle.
True.
Long-term effects, we'll have to see how it all plays out.
Right.
But one thing is clear.
What's that?
It encourages everyone, businesses, individuals, to really understand foreign currency.
To be more savvy, more strategic.
Exactly. Knowledge is power, especially when it comes to finances.
Couldn't agree more. Great insights. Thank you.
You're welcome. Always a pleasure to dive deep.
And to everyone listening, keep those questions coming, keep exploring, and we'll see you next time for another deep dive.
See you then.